Should you put your money into a savings account or should you put your money into the stock market? Hey there, welcome back to the channel. It's Victoria here, and in this video, I'm going to break down the differences between putting your money into a savings account and into the stock market. Wait till the very end because I'll be sharing with you why you should never just put your money into a savings or checking account. And I'll also show what I'm doing. If you're interested in keeping, maintaining, and growing your money, subscribe to my channel. I do post about personal finance and investing every week. Just a disclaimer, I am not a financial advisor, and the information I'm sharing with you is solely from my own research. If you're interested in any of this, be sure to do your own research. First, let's go over why you want to put money into a savings or a checking account. You may want to put your money into a savings account for easy access to your money. So for example, if something had happened and you will need quick and easy access to money, the best way is if the money was kept in a savings or checking account. Because of how easy it is to liquidate it, it's pretty much cash in your hands, which makes it both a good thing and a bad thing. It's good in that you can easily access it when you really need it. For example, if something breaks in the house or you had an emergency and you need to go to the hospital, a number of things could happen in the short term. It is also a bad thing. The reason for this is because it is so easy to access this money, you're more likely to spend it. Another good thing about putting your money into a savings or checking account is that it does earn you interest, which means that the bank is paying you for keeping your money in your account. Now, this interest is usually very low, but it is free money. The average interest in the US for a savings account is 0.05%, and the average interest rate for a checking account is 0.06%. So for a savings account, if you put in $10,000 with an average interest rate in the US, you could earn $5 every year. And if you put that same $10,000 into a checking account that earns the national average, you could earn $6 in interest. This is nice because it is money for you to keep, but there's a huge downside to this very low interest rate. And there's a reason why you shouldn't just keep your money in a savings or checking account. It's nice to have this interest rate because you do get to earn money by putting your money away, but because of how low it is, it actually can hurt you in the end. And this is because of something called inflation. Now, inflation is the increase of prices and the decrease in the purchasing value of money. Have you heard of the saying that a dollar today is not the same as a dollar at a future date due to inflation and interest rate? For example, the average price of a gallon of milk in the 90s was between 99 cents to $1.99. Now today, the average gallon of milk is $3.16. Now that is just one example of inflation in our economy. You can see this happening in rent prices and the average cost of living in major cities. Now let's take a look at the current US inflation. The current US inflation is 1.2% for the last 12 months ended October 2020. And this is a chart of the US inflation rates from 2010 to 2020. This fluctuates. As you can see, last year's inflation rate was at 2.3%. In short, it doesn't feel like this inflation rate can impact you directly, but it really does because the $10,000 you put into a savings or checking account will not be the same $10,000 next year. The purchasing power of that $10,000 you saved in your savings or checking account will decrease by 1.2%. And so this is why by putting your money into a savings or checking account, you're actually losing money. Honestly, it would be better off if you just spent it because that way at least you got something out of it today and you didn't lose money from keeping it in your checking or savings account. This just says that even if you put your money away and think that you're saving for your future, you're actually losing money as you're putting it into these savings and checking accounts. Now, this is not to say that all checking and savings accounts are bad, but the average banks in the US very low interest rate. Because of this, you want to put your money elsewhere so that your money can beat the rate of inflation. I do have a video on other high interest savings and other high interest checking accounts that I'll link here and in the description below. If you're interested in storing your money there, you can yield a higher interest that can beat the rate of inflation. But even if you put your money into the savings or checking account, it will be smart to not keep all of your money into these accounts. And this is where putting your money into the stock market comes in. And the reason for this is even though you may be getting a interest rate that is slightly beating the inflation rate, that doesn't mean that your money is growing. What you want to do is make sure your money is growing over time. By investing into a riskier account, you have an opportunity to gain more out of it. The higher the risk, the higher the potential return. Now, the difference between putting your money into a savings account and the stock market is that while picking stocks and putting your money into the stock market can be a lot more riskier, especially if you invest in a company that goes under. This means that you could lose all the money you put into investing in this one company. But due to the fact that it is a lot more riskier, you do have a potential to earn a lot more. And just to give you an example, I purchased Tesla last year at a share price of $200. I held on to my shares of Tesla. And this year, before the stock split, it was up to $1,600 per share. This may be a unique case for my investment. This just shows you the growth potential for investing in the stock market. But it can also be very risky. Before we continue, be sure to give this video a thumbs up. Drop a comment below to let me know whether you put most of your money in savings accounts or in the stock market. Now, obviously, if you're new to investing, it may not be the best place to start your money by individually picking stocks. There's another way to invest in the stock market. This is through things like investing in ETFs, index funds, and mutual funds. If you're interested in learning more about these different types of investments, check out this video I have here where I go over the differences amongst the three and which one makes the most sense for you, depending on your situation. Putting your money into one of these index funds or ETFs makes a lot of sense because it is a lot less riskier than investing in individual stocks, but you'll also get a lot more high returns than putting your money into a savings or checkings account. And this way, it also lowers your risk by investing in hundreds and thousands of companies through one investment. Especially lowers your risk if any of these companies go under. Now you can be in the market without exposing yourself to just one or two stocks that could lose a lot of money. Unless you're an active investor or you're a day trader, investing in index funds and ETFs is the best way to invest in the stock market. With anything you buy in the stock market, it can be risky. It will take a few days for you to liquidate any of your shares. And another drawback of investing in the stock market is that you will be taxed heavily. If you liquidate within a year, you will be taxed at your ordinary income tax rate. Now that we know why you shouldn't just keep your money in a savings account or checking account, let's take a look at where I have put my money. I do invest in individual stocks as well as index funds and ETFs. I try not to put everything into the stock market because it is not liquid. So this is what I have done. I have saved enough in my savings and checkings that will cover 3 to 5 months of expenses. That is easily accessible, and this is spread amongst different high interest checkings and high yield savings accounts. I have half of my investment in index funds and ETFs, and the other half are individually picked stocks. I do have a small portion of my investments into cryptocurrencies, such as Bitcoin and Ethereum. If you're new to investing or want to get started, the first thing you'll want to do is open a brokerage account. Be sure to do it through a commission-free broker. The one I really enjoy using right now is Webull. If you sign up with the link in my bio and deposit $100, you will get 3 free stocks. And it also supports my channel if you use my referral link. But if you know a family or friend who has Webull, definitely use their referral link. I hope you enjoyed this video. If you found any value in it, please give me a thumbs up and be sure to subscribe to my channel for more videos like this. If you're interested in high interest checking accounts to park your money before you start investing, check out this video here.